Okay.
Very good evening. I'm Richa Sachdeva, a part of NBC team, and I welcome you all. NBC Advisors Pvt Limited happens to be a one-stop shop for all kind of advisory services, such as strategical entry for doing business in India and overseas, organizational development, recruitments consulting, business administration, and payroll, etc. Today's session is on doing business in US. The United States is consistently ranked among the best internationally for its overall competitiveness and ease of doing business. As a stable democracy with a transparent and a predictable legal system, it's also backed up by a regulatory environment. To talk about the mandatory compliances and regulations in details, we have Dr. Martin Palante, President at India Market Entry Specialists Division of 2020 Management Consulting, who's a highly successful global executive and a keynoter with vast experience producing and marketing industrial products and services in the commercial centers of the world. And Mr. Neeraj Bhagat, Director, NBC Advisors Pvt Limited, who has a rich bank of experience of handling corporate affairs in different areas for more than 2 decades and has helped many organizations to set up business in India and operating it successfully. We have both of them as keynote speakers for today's session. And we'll be glad to answer all of your questions towards the end of the session. We'll be having a small Q&A round. So over to you, Dr. Palante.
Rika, thank you very much. And ladies and gentlemen, good afternoon. It certainly is a pleasure, a privilege, and a great honor to have this opportunity to speak with you about doing business in the United States. Today, let's take a look at the agenda that we're going to follow today. Yep. So we're having a little technical difficulty, I believe. Okay. Doing business in the USA, really what we're doing today is a primer for Indian companies. The agenda that we're going to follow is we'll look at some factoids about the USA, why to do business in the USA, how to do business in the USA, how to start a foreign-owned business in the USA, and ways to enter the USA market. That will be followed by a question and answer period. Now, some factoids. The United States is 3.8 million square miles, which is about 3 times that of India. Our population here, according to the 2020 census, should be about 340 million people. The 2020 GDP was 2.4%. Of course, that was affected by COVID-19 severely. The unemployment rate in 2020 was 6.7%. That was about double what it was before COVID hit. Prior to COVID, we were running about 3.5%. I'm trying to get us back up here, folks. Our average household income, $61,375. Median household income, $61,625. The minimum wage in the United States varies from $7.25 per hour to $15.75 per hour. That depends on what state you're talking about. States like Alabama, Mississippi, New Orleans, Louisiana, Georgia, anything in the South or the Midwest will be towards the lower end of the scale. California, New York, New Jersey will be towards the higher end of the scale. Now we ask the question, why do business in the USA? First and foremost, my friends, it's because of the market dynamics that exist here. We are the world's largest market, totaling about $20 trillion. Think of that, $20 trillion in 2020. The USA accounts for 4.2% of the world's population. We produce 20% of its goods, and we account for approximately 33% of the world's global consumption. Household spending in the United States is the largest in the world. Consumer spending was up 6% in January of 2021, just after the vaccines came on board. People could get vaccinated, people starting to go out, buying more products, going to restaurants, etc. Unfortunately, Critical parts are still in short supply in the US, and that was according to the Forbes March 3rd, 2021 article. At the present time, we have free trade agreements with 20 other countries, not including India, that help facilitate the movement of goods in and out of our country. Primary amongst that is the United States-Mexico-Canadian agreement, which allows companies in those three countries to move goods across the borders, incurring very little or no tax. Second question we ask again is, why do business in the USA? The answer this time, because of the innovative culture that we have here. We really are considered to be the nexus of innovation. The United States registers the most international patents of any country in the world. Patents registered here have a 17-year life, and extensions are possible if the inventor can prove that they have added significant improvements to the patent. We provide robust intellectual property protection systems here that keep the patents whole. That's through trademark, copyright, patent registration. One of the things really driving current innovative culture in the US is something we term business incubators. These are small establishments for young, new entrepreneurs who have these wonderful business ideas, don't have the money, the finances available to get them off the ground. Cities, states, and sometimes the federal government will assist these people or these small companies in incubating their idea. One of the greatest ideas to come out of them is happening just about 10 miles from where I'm sitting, and that is three-dimensional printing. It really had its genesis here, its development here, and its perfection here. Also, innovation is nurtured by some of the world's foremost technical and scientific universities. In fact, of all the universities and colleges in the United States, thousands, there are only 2 that do not receive government funding to drive innovation. The next reason why we do business in the USA is because of the tremendous governmental support that we receive. It's a conducive regulatory environment. Now, I know you might be reading today about the Biden administration enacting more regulations, driving some climate change legislation that will restrict some business activities, particularly those that involve the use of fossil fuels. But really, climate change legislation changes are unknown at this time. We still have a very business-friendly environment, and we certainly operate on the free enterprise system. In the United States, all companies compete on a legal playing field, and this is guaranteed by the antitrust laws, very, very rigorous enforcement of these antitrust laws that stop large companies from swallowing up small ones and actually, doing away with competition that you'd find with many companies supplying the same product, the same service. From an ease of doing business standpoint, we are 6th in the world according to the World Bank. And in the United States, we have 250 free trade zones. These are zones where companies can bring in product from foreign companies, add value, and ship them back out of the country and not pay tax on the landed product, but rather pay tax only on the added value. The next reason why we do business in the United States, I think this is really important to anyone considering moving a business into the United States or expanding into the United States. We have abundant deposits of natural resources. We have coal, both steam coal, metallurgical coal, natural gas, crude oil. We are energy independent. We don't have to depend on bringing in anything really from anyone save gold. We have iron ore. We have bauxite, essential for aluminum. We have all the rare earth elements. We have uranium, copper, silver. As I said, we don't have much gold. If you have to have gold in your product, chances are you're going to have to bring that in primarily from Brazil. Another reason for doing business in the USA is the infrastructure system that we have here. It's an expansive network that helps companies transport component materials that efficiently produce products and move them to market. We have a national interstate highway system, north and south, east and west. We have freight railways. Now, we don't have good passenger railways. The Great Lakes, 5 huge lakes at the middle of the country up at the Canadian border, another network for moving product back and forth. The Mississippi River network running north from the Canadian border all the way down through the entire 1,600-mile length of the country into the port of New Orleans. We have a network of petroleum pipelines that transport crude and refined products up and down, back and forth across the country. 2 of the world's largest airports located in the United States, in Chicago and Atlanta. And the last reason, we have major seaports all up and down the East Coast, the West Coast, and across the Gulf Coast, moving product in and out of the country. And another reason, and this is particularly true now, why do business in the USA now? It's a recent phenomenon, and that's because of COVID-19. COVID-19 exposed the fact that we had great product shortages. It didn't take much more than the announcement that there was an epidemic when people began to hoard paper products. We had tremendous shortages in paper products, some foodstuffs, some personal protective equipment. It revealed that we had a major dependence on China. What did this mean then? What does this mean to us? What does this mean possibly to you? There are more opportunities now, more than ever, to import products from other countries because there is a concerted effort to reduce our dependence on China. Secondly, a reason for coming into the United States, establishing a presence here, is big box stores have committed to large purchases of made in the USA products. Customers here, consumers here, we're willing to pay more for those products. We know they're going to cost a little more, but we're willing to pay more because we want to be guaranteed that we'll have the essential products that we need. And currently, thanks to the Trump administration, we now have competitive corporate tax rates for those companies doing business in the United States. And what are those taxes? Well, if it's a C corporation, those are typically the large corporations that are listed on one of the stock exchanges. The federal corporate tax rate is 21%. But thanks to loopholes and incentives, it can possibly be reduced below this rate. State tax rates on corporate income, they vary anywhere from 3% to 12%, depending on the state. California, New York, New Jersey, and Massachusetts are the highest. Some of the southern states are the lowest. LLC tax rates, those LLCs are corporations no more than 100 people. They're not listed on the stock exchange. They are made up of members, not shareholders. The members actually own the corporation. Those earnings from an LLC corporation are taxed at the personal rate because the income passes through to the various members. Now, what are these personal federal tax rates? They vary anywhere from 10 to 37%. It depends on how much you earn, what your adjusted gross income is, and that is all subject to permissible deductions and credits. We also pay personal state tax rates. Those rates go from 0 to 17.6%. Florida, South Dakota, Tennessee, Texas, Washington, Wyoming, residents there pay 0. In California, if you live in the land of fruits and nuts, as we like to call it, it's 17.6%. So it's possible that a resident of California at the upper end of the tax bracket can be paying 54% in personal and federal tax rates. In addition, there's sometimes our municipal tax rates that could push that up closer to 60%. Now, we've talked about why do business in the United States and all the reasons why it makes sense, particularly at this time. Now we want to talk about ways to enter the US market. There are several ways. The easiest, obviously, is through a distributor partner where you're bringing your products into the States being marketed by a distributor in a like business. You can have a startup corporation where you take a real physical presence in the United States, join with a joint venture partner, purchase an existing company through a merger or through a franchisee situation. All of those ways you can enter the US. Now, what are the steps? Once you determine how you're going to come into the US, and if it's anything but a distributor relationship, if you're really going to establish a presence here, how do you do that? Well, first you choose a company structure. It's a C corporation or a limited liability company. Then you choose a company name, making sure that the name isn't used by someone else. Then you choose a state of incorporation. Typically, people incorporate in Wyoming, Nevada, or Delaware because it's easier, it's less complex, it's quicker, it's less costly. Then once you've chosen the state, the name, the structure, you register the corporation. Then you obtain an employer identification number, an EIN, from the federal government. That allows you to pay your taxes. Then you check if any special licenses are required, depending upon the product you're bringing in, how you're going to sell it. You verify any visa requirements that may be necessary if you're going to have people from the home office in India come to the United States for a period of time to get the business off the ground, for training, whatever the reason might be. You're going to have visa requirements checked so that everything can happen at the time when you want it to happen. And the last thing, you have to file a BE13 survey with the United States Bureau of Economic Statistics. That is really just a very easy function. Now let's take a look at C corporations. These are the larger publicly traded companies. If you elect to go this route, what are the advantages? Well, first and foremost is the access to capital. Through issuing shares in the company, selling shares, you raise capital. C corporations limit the liability of the owners to any debts or losses that the company may occur. The shareholders are not responsible for those. The company which you created is. Personal assets of the shareholders cannot be seized to pay for business debts. The corporation can be transferred to new owners quite easily, and there is a long life expectancy. The corporation does not depend on one or two shareholders. It's a large group of shareholders. One sells out, another buys in, the corporation continues. What are the disadvantages? Well, establishing a corporation is costly. Starting a C corporation requires complex paperwork. Maintaining the C corporation is also costly. C corporation income is taxed twice. The income, the earnings of the corporation are taxed. And then if the corporation issues dividends to the shareholders pay tax on those dividends according to their personal income scale. Now let's compare that and see what a limited liability company is. Well, the advantages of a limited liability company, which is a smaller privately owned company, it's simple to form, it's easy to maintain, but it too limits the liability of the members. Members are not responsible for debts and losses incurred by the company. It has tax advantages because rather than being taxed at the levels of the state and the federal income tax, earnings are taxed as they're passed through to the members at the members' particular tax level. There's a flexibility of distribution. The earnings are distributed according to the value of the holdings in the corporation of the various members, unlike a C corporation where the share earnings are distributed according to the share value of the earnings for each member. In other words, all members get, if they each own 100 shares, they each get $1 a share. If some own 100, some get 50, they still get $1 a share. Limited liability company is controlled by the members, not the board of directors. So there's more immediate control. What are the disadvantages? Well, first and foremost, it's very difficult to raise capital because you're not selling shares. To raise capital, the members have to give input and invest more money into the company. They either do that from their personal funds or by borrowing individually. There is no perpetual existence of an LLC. When one member leaves the company has to be dissolved. And if the members want, they can form a new company. But if a member leaves, the company is dissolved. Members have to pay self-employment tax. That's tax that the government uses to fund Medicare and our old age pensions. That is about a 14.6% tax on all sales and earnings. So it is a very, very, very strong tax. And let me rephrase that. It is a self-employment tax, 14.6% on all of the members' earnings, not sales, on their earnings. There's no retention of earnings in a limited liability company. The earnings have to be distributed. Now, of course, before the earnings are distributed, funds can be used for corporate improvement, any type of capital investments, etc. Sale of an LLC is subject to capital gains tax, even if no cash is involved. In other words, if a LLC is acquired by another C corporation and it's for a payment in shares of the capital C corporation, the value of those shares is taxed. Keys to success in the USA. My friends, there are 8 fundamental truths that we really believe in. First, in order to succeed, you have to quantify and qualify the market. You have to know how big the market is, who's buying how much, and why they're buying. You have to understand the market dynamics. You have to know the barriers to entry. You have to know why your would-be competitors succeed and why some of them fail. You must have sufficient capital. You must develop a broad market base, and you have to focus on the total value proposition. What will differentiate your product, your company, your initiative from your competitors? Hopefully, in the United States, not low price, because here, if you drop your price below that of your competitor, sure as sure can be, one of those competitors will come in and drop that price below you. It's a never-ending cycle that ends up with both going out of business. You have to have sufficient marketing firepower. Next to last, good hiring decisions. In the States, it's important, and probably across the world, but here we found it's much better to hire people that want to work for you rather than those who can't find another job and have to work for you. And lastly, this is really important, friends. In the United States, we're all different. We're not one type of person. Therefore, have a thorough understanding of the cultural differences that make us so different so that you can direct your marketing, your advertising, your sales initiative to address and appeal to those cultural differences. Now, my friends, India Market Entry Specialists, our company, what can we do for you? Well, we provide a broad spectrum of market entry services: market research, partner search, recruitment, joint venture, company formation, business registrations, property search, resident director, import, export, logistics and warehousing, and manufacturing setup. And you might ask, well, we know all that. Why do we have to hire a market specialist? We can go to our chambers of commerce, our business advisory here at home. We can get the information. Typically, friends, that information is dated. It's been on the shelf. It really is no longer relevant. We would suggest that regardless of how you plan to enter the United States, work with a professional market entry specialist who will facilitate every step of the process to absolutely ensure that your company will limit investment and risk to the greatest degree while maximizing success possibilities. My friends, it's been a real pleasure to speak with you. I hope you have questions. I look forward to talking with you after Niraj is done. In the meantime, thank you so much. If you have questions we don't get a chance to answer after the presentation, this is my email address. This is my phone number. Please feel free to contact me anytime at your convenience. Thank you so much. And now please enjoy Niraj's presentation.
Thank you, Martin.
Can you hear me, Niraj?
Yes, Martin. I'll just start my presentation.
Okay, very good. Thank you so much, Niraj. I appreciate your cooperation.
Thank you, Martin. So thanks, Martin, for the insights on doing business in India. And thanks, participants, for bearing with us. So as you heard from Martin, how to do business in India. So if you decide that you want to do business in US or any part of the world outside India, then there are a set of compliances that need to be taken care in India also. And these compliances in India have been defined by Foreign Exchange Management Act, FEMA guidelines. And these are popularly called ODA regulations. So I'll throw some light on what are the ODA regulations, what needs to be done, The company has to be opened outside India. Now, there could be two situations that you own a 100% company outside India, which is controlled by your Indian company, wherein you open a new company and you become a subscriber to memorandum of the Indian entity, US entity. In that case, you become a subscriber to memorandum and articles of the foreign company. There could also be a situation that you buy a company which is already in existence in US, wherein you buy the shares of the existing shareholders. That case also, in the both cases, the ODA regulations will come into place. You have to comply with the FEMA regulations that have been prescribed by the Government of India. Now, when it comes to ODA compliances, there can be two sets of compliances. One is under an automatic route. In the automatic route guidelines, you don't have to approach RBI. There are a set of guidelines which need to be taken care. Once these compliances are in place, guidelines are in place, and you comply with these guidelines, then the documents have to be given to the AD banker. AD banker will vet these documents, generate a UIN number, and then affect the remittance outside India. So it's very important to note that you don't need an approval, but there are a set of guidelines which need to be complied with. And once they are complied with, AD banker will vet these documents and file it with the RBI and affect the remittance outside India. Now, there are also guidelines wherein you have to have an approval from the RBI, then only you can have a remittance outside India. So in case of an automatic route guideline, approval route guideline, the documents had to be given to the AD bank. AD bank will give it to the RBI. RBI will grant an approval. And once the RBI grants an approval, the AD bank will generate an UIN number and affect the remittance outside India. Now, there could also be a case that some activities are not allowed for the Indian investors. So in that case, you cannot affect the remittance outside India. And for these businesses, the Indian investors are not allowed to invest outside India. Now, we'll see what all type of the structures are allowed to invest outside India. A normal company, which could be a public limited company or private limited company, is allowed to invest outside India. Any body under an act of parliament is also allowed to invest outside India. A registered partnership firm, a very important thing, a registered partnership firm is allowed to invest outside India under an automatic route. But if it is an unregistered partnership firm, then you have to seek an approval from RBI, then only you can invest outside India. So generally, the companies, the partnership firms in India, they're not registered. So in case you're looking to expand your business outside India, you ensure that the partnership firm is registered, and then only you can have a remittance outside India and you can do business outside India. Similarly, the limited liability partnership, it is also allowed to invest outside India. Any other entity which is notified by an RBI is also allowed to invest outside India. A very important, Indian resident. Now, as per the LRS scheme, $250,000 is allowed to be invested outside India without any approval. And for amount above more than that, you have to seek an approval from RBI. Now, the proprietorship firms and the Indian residents are considered under same category. So if the Indian resident is investing $250,000 and they want to remit similar amount in their proprietorship firm, so they both would be clubbed, and only $250,000 would be allowed to be invested outside India. Now, there could be a situation that the Indian company wants to operate as a joint venture outside India, and the joint venture partner can be a company outside India, or it can be a partner in India also. So in which case there are two joint venture partners in India and they invest outside India, then they have to ensure that both these joint venture partners, they open an account with a single bank, and the AD bank will affect the remittance for both these clients, the single company outside India. Similarly, the Indian party can also open a wholly owned subsidiary outside India. And in both cases, both in joint venture as well as wholly owned subsidiary, the ODA guidelines have to be complied with. Depending upon the nature of business, it could be a automatic route or it could be an approval route. We'll see what all sectors are allowed to invest outside India. As a thumb rule, all the sectors are allowed to invest outside India except real estate and banking. Now, the very important thing, the definition of real estate has been defined by the RBI. So the companies which are into trading of real estate, they have to seek an approval from RBI. Then only they are allowed to invest outside India. But if you are buying a land outside India and constructing a housing society or a commercial land or commercial structure, then you don't need approval from RBI. Then it comes under an automatic route. You can open a company outside India, buy a land, and reconstruct or construct over that land and you can sell that into parts, that is very much allowed and you don't need an approval from RBI. Similarly, the Indian corporates looking to open a bank outside India, they are not allowed to do that. But if it's an Indian bank, they want to open another bank outside India, they can approach RBI, seek an approval from them, then open a branch or a subsidiary outside India. Similarly, there could be a case that there is already a joint venture outside India and they want to offer financial products which are linked to INR. Then they have to approach RBI and then only they can offer these financial products outside India. Now there are some additional conditions that need to be complied by a non-financial, the financial services company which is looking to invest outside India and do the similar business outside India. So the conditions include that the NBFC in India or financial services company in India should be profitable during the last 3 years. Then only it is allowed to invest outside India. Without that, it is not allowed. It should be registered with the Reserve Bank of India and it should be having an approval as an NBFC. Then only it can do the similar activities outside India. The NBFC should also get an approval from the country where it wants to do the similar activities. If it doesn't have an approval from that country, then the investment is not allowed to be done from India to outside India. Similarly, the Indian company should have complied with the minimum capital adequacy norms, which in India are present at 20 million Indian rupees. So if you have a capital of 20 million Indian rupees and you have an approval from RBI, then you are qualified to do a NBFC activity in India. Then only you can invest outside India. Now, there could be a situation that the NBFC activity wants to do a non-finance business outside India. Then also the NBFC activity company has to ensure that all these 4 conditions are complied with, even if we're doing non-financial activity outside India. Now, some of the proposals which require an RBI approval, the companies into energy and natural resources sector, if they are exceeding the prescribed net worth limit, they have to seek an approval from RBI. Similarly, the companies in the oil sector looking to invest into overseas unincorporated bodies, they have to seek an approval from RBI, then only they can invest outside India. Similarly, ODA by proprietorship concerns and individuals beyond the limit of $250,000 in a year, they also have to approach RBI, then only they can invest outside India. Similarly, the corporates who want to give a guarantee to its first and the subsequent level of step-down subsidiary, they have to seek an approval from RBI. Similarly, the corporate guarantee by the Indian party to the second and the subsequent level of step-down subsidiary will also require an approval from RBI. Similarly, ODA with the registered trust and the societies in a joint venture or a wholly owned subsidiary outside India, you have to have an approval from RBI, then only you can invest outside India. Now, there could be a case that you already have a WS or a joint venture outside India and you want to write off the capital or the capital or the assets outside India. Then you have to seek an approval from RBI. Then you can write off the capital and the capital and the receivables outside India. Now, generally, there are a lot of exports that are made from India to outside India. So there could be a situation wherein you don't want to realize the exports and you want to buy the shares of the company to whom the exports have been made. So in that case, if the exports are realized within 9 months, then it comes under an automatic route and you don't have to take an approval. But if the export realization is pending for more than 9 months, you want to capitalize these export receivables, then you have to seek an approval from RBI. Then only you can invest into the shares by way of a capitalization of exports. Now, some of the countries, you can open a company without having a share capital. So in case of the countries wherein there is no share capital and you want to invest outside India by way of a loan or other forms, then you have to seek an approval from RBI. Tell them that we want to buy the shares of these company and there would not be any remittance from India to outside India. In this case, the RBI will grant an approval. Then only you can hold the shares outside India. A lot of times I've seen that the promoters and the investors, they go for a holiday or for a business trip outside India, and they have meetings with the consultants outside India. They say that you can open a company in 1 day, 2 days, and wherein they sign the documents and the company is open in 2-3 days time. So in that case, they hold the shares, but no remittance is made from India to outside India. So wherein if you hold the shares and where no remittance has to be made, then you have to ensure that you take a permission from RBI. Otherwise, you have to seek a compounding route and get the offense compounded by the RBI. And otherwise, there would be penal action on the investors. Now we'll see what all is the quantum that is allowed to be invested outside India. Now, Indian party can make outside India almost 4 times of the net worth of the Indian entity. Now, before we discuss what is the net worth and what amount, what all is covered under financial commitment. So if you are going to invest in the shares, which could be an equity or a preference shares in a company outside India, so that covers under financial commitment. You could also be granting a loan to the company outside India that comes as a part of a financial commitment. Similarly, you could also be giving a guarantee to the company outside India. Similarly, there could also be a case that bank on behalf of your Indian company is giving a guarantee, then the 100% of that guarantee is also considered as a financial commitment. There's a case wherein if you're giving a performance guarantee for a project to be executed outside India, then in case of a performance guarantee, 50% of the performance guarantee is only counted as a financial commitment. So all these forms, 4 times of the net worth of the Indian company is allowed to be invested outside India. But that doesn't include if you have an EFC account, exchange earners foreign currency account, and then the remittance is made from this EFC account, then the full amount from the EFC account, there is no limit to that. And then you don't have to see the 4 times of the net worth. Any amount lying in EFC account can be remitted outside India for the purpose of investment outside India. Similarly, the foreign currency lying in ADR, GDR proceeds can also be used for a remittance outside India. So in corrects, 4 times of the net worth plus the money lying in an EFC account, money lying in the proceeds of ADR, GDR can be used for investing outside India. Throw some lights on loans and guarantees. So as I already discussed, the loans is allowed up to the 4 times of the net worth. But if you are looking for giving a loan to the subsidiary company outside India and no share capital has been subscribed, then again you have to seek an approval from RBI. Then only you can invest as a loan outside India. As far as the guarantee is concerned, the Indian companies, they are allowed to invest, they are allowed to give a guarantee, and the guarantee can also be given by a sister company or a group company. Similarly, the promoters, they are also allowed to give the guarantee to the parent company, to the subsidiary company. Now, any type of guarantee which is given to a subsidiary company should not be an open-ended. It should be a defined period for that. And also the amount of guarantee should also be specified in the guarantee document. Then only the banker in India will allow the guarantee to be given to the third party or to the subsidiary company outside India. Now, besides all these regulations which have been discussed in the previous slides, now there are 4 more regulations. So wherein if the investment outside India is more than $1 billion, then you have to seek an approval from RBI. You also have to ensure that the overseas joint venture or a wholly owned subsidiary shall carry the bona fide activities which are allowed as per the laws of their country. Similarly, the Indian party which is investing outside India should not be under a caution list of the RBI or should not be under investigation by the agencies like Enforcement Directorate or a CBI. Very important, all the transactions should be routed through one branch of an AT bank. If you have made the remittance for first investment and you want to make a similar investment after say 6 months or 1 year, you have to ensure that the payment is made from the similar bank and the similar branch from which it was earlier remitted outside India. Now, if the conditions are not fulfilled, if any of the conditions in the previous slides are not fulfilled, what next? So in that case, you have to approach RBI, and RBI on a case-to-case basis, after verifying what is the viability of the financial product that has to be executed outside India, how it is going to contribute to the external trade, that also see what is the experience of the party which is going to execute that. You'll also see the financial capacity of the Indian party which is going to execute. And on the case-to-case basis, they grant an approval, then the Indian party can invest outside India and execute the project. Now, what all is allowed, what all funds can be used to invest outside India? It could be a market purchase, wherein you go to the banker, get the exchange rate, convert the Indian rupees into a foreign currency, and the funds can be remitted outside India. It could be swap of shares. You want to invest into a shares of a foreign company, and in turn, you don't need the funds from the company, so you don't need to invest into the share, the funds. Then in turn, the company in which it is you are investing, they want to hold the shares in your company. So the swap of shares is also allowed, and you have to comply with the Oda regulations for that. Similarly, the capitalization of exports, if it is within 9 months, you don't need an approval. If it is more than 9 months, then you need an approval from RBI. Similarly, in exchange of an ADR and GDR issue, if you have issued the GDR ADR, and instead of getting the funds, you hold the shares in the institution which is issuing the ADR. who is subscribing to the ADR. Similarly, the balances held in EFC account can be used for making an investment outside India. Similarly, the proceeds of ADR and GDR can also be used for making an investment outside India. Now, something on the step-down subsidiary. If you open a subsidiary outside India, then that subsidiary can also have further step-down subsidiaries. So I will throw some light on that. There's no restriction on opening any step-down subsidiary, and provided the terms and the nature of activity of the step-down subsidiary falls under automatic route. Then the financial, if the step-down subsidiary is into financial services sector, to ensure that all the 4 guidelines which have been discussed in the 4 previous slide, they are complied with. Similarly, there should not be any Indian subsidiary of a subsidiary outside India that comes out to a reverse tripping, wherein the investment is made from India and then again it comes back. So the round tripping is not allowed. And if you really want to do that and for the business needs, then you have to seek an approval from RBI. And on a case-to-case basis, the round tripping cases are also allowed by RBI if it adds to the external trade or it adds to the economy of the country. Now, there could be a case that suppose you have a relative or a friend or outside India, and he's having a company outside India, and they are doing business outside India, and for some reasons they want to give these shares to you, or you want to inherit these shares. So these are allowed, and as per the RBI regulations, you don't need a permission from them, and it's allowed under automatic route. There are guidelines that need to be given, and you have to approach the ODI bank, and in regulatory filing has to be done. In that case, you can hold the shares by way of a gift or an inheritance, which should be done by the resident who is outside India. Now, there could also be a case, somebody is an employee of a foreign subsidiary, and as per the terms of the employment agreement, that employee would be allotted shares of a foreign parent. So in that case, it is allowed under automatic route. And as per the regulations, you have to report that to the AD bank, to the RBI via an AD bank within 30 days of the shares being allotted. And as per the ODI guidelines, this is allowed. And as and when you sell these shares, and the money comes into India, then the reporting you have made to the AD bank, that will come into play, and you would not be a non-compliant. And the money can come to India freely and very easily. So once you have done the compliances in India, the ODI in India, ODI from India, then there are a set of guidelines and the set of compliances which need to be taken care after the remittance has been made and the investment has been made outside India. On the initial investment, you have to ensure that you fill in Form A2, you fill in Form ODI. There will be a board decision by the Indian company. There should be a statutory auditor certificate and evaluation. All these documents have to be given to the AD banker, which will vet these documents and then affect the remittance. Similarly, after remittance, you have to ensure that the share certificates are issued by the foreign company and they are brought in India, because the proof of that has to be submitted with the AD banker. Otherwise, they would be after you and there could be a non-compliance with the RBI regulations. Subsequent investment, again, if you have invested outside India and you want to do the similar activity 6 months, 1 year, 2 years down the line, you have to fill up the Form ODI and a similar set of documents. Then the remittance can be done outside India. Similarly, if there is any fee for technical services, royalty, or a dividend which is due from the foreign company, it should be brought in within 60 days of becoming due. Otherwise, there is a non-compliance, and then you have to go for a compounding of the same. Lastly, you have to ensure that there will be annual filing. Annual filing has to be done in a Form APR. That has to be done before 31st of December every year, and wherein you have to also give the accounts of the foreign subsidiary. But if as per the laws of that country, there is no audited accounts, then these accounts have to be adopted by the board of directors of the Indian company and certified by the statutory auditors of the Indian company, and then submitted with the AD bank. Similarly, a lot of clients have seen that they fail to file FLA return, which has to be filed before 15 July. That is also generally forgot. A lot of clients forget that, and then when the notice comes from RBI, then they file it and comply with the regulation. Now, lastly, this is a format. If there is a shares that have been allotted on an ESOP basis, or if there is a shares allotted by way of gift or inheritance, there's a reporting format which has to be reported to the AD bank within 30 days of being allotted to. So that's from my side. We are open for any question and answers, and myself and Martin would be happy to answer. Even if you don't have a time, you can email us and we will be happy to answer after this session also.
Yes, so we have a question from Mr. Neeraj Bhatt, but I think he's left already. However, I'll read that question for you. Maybe it can help the other attendees. The question is, we own IT company registered in India. So how can we set up USA company and get visa to expand business in US?
I'm sorry, would you repeat that, please?
Sure. It says we own an IT company registered in India. How can we set up a USA company and get visa to expand business in the USA?
In order to provide a real complete answer to that, what we would need is a company profile describing the company, the products, the size of the company, so that we can get a real clear picture of who they are, what they do, for whom they do it. And then we could discuss that with our taxation people, our market entry people that would be specifically responsible for IT market entry. But generally, what we would do would be to find the best way for them to enter the country. Now, I'm assuming, based on the question and the way it was formed, that they want to enter the country and establish a legal presence in the United States as opposed to working with a US distributor. So, we really would have to talk to them specifically and find out how they want to come in. Do they want to do it through a distributor? Do they want to do it through establishing a legal presence here? If they want to establish a legal presence here, then we would have to go through the visa process to find out when they want to come, how often they want to come, who wants to come, and get through that background. So just to give an overall answer, that's the best we can do, but it would all start by them supplying to us a company profile that gives us some better knowledge that we could work with our people, specialists in those various areas. But obviously it's something that can be done. The specific steps we'd have to outline for them. So I would ask that perhaps if you would, or that person's given you their email address, I could respond to them directly, or they can query me directly via email for a more complete answer.
Certainly, I'll share the email address with you in the later stages. The next question is from Mr. Juneja, and that is for Mr. Bhagat. So I'm allowing him to speak to you directly.
Sure.
Hi, Neeraj, Manik this side. My question is that you mentioned even when somebody is issued an Esop, they have to go through the AD bank. So in case of company formation, I understand that you transfer money through the bank, but in case of Esop, is it the option price, or what is the role of the AD bank in the Esop case?
You see, when the shares are allotted to you, because it's not that the rights have been allotted to you, and it's not because when you exercise that right and the shares are allotted to you, then you have to, the banker with which you are banking, you have to report that the shares have been allotted to you, and the banker will scrutinize this application and then submit it to the RBI. And then once the documents are submitted to the RBI, you get an UIN number. That is very important that the RBI has been reported, because what happens is that when you sell these shares, the money has to come to India. The banker will start an objection, why you have not reported to the RBI. So that is why the banker with which you are banking, a simple application has to be given to the bank that these shares have been allotted to you under an ESOP scheme. Then the banker will take that on record and submit to the RBI.
Okay. And the way you said that for in case of companies, a lot of people who are just traveling abroad, they happen to pay, and incorporate a company there without,
Yes.
usually. So I've done something similar for my ESOP. So can this be fixed? I was there.
Yeah.
And I paid in cash.
No. You see, what happens is money. Because generally, I've seen that a lot of clients, they just go abroad and they meet a consultant. They say that we can open the company for 2 or 3 days time. And generally, what happens is that the shares are not allotted for a subscription, and you pay a cash or you open a bank account there. So that's a non-compliance with an RBI regulation. So what you can do it now is that we can file an application for a compounding. Yes, that has already been done. RBI will take that on record and ask you to do the compounding, and they will levy some penalty depending upon how much money you have spent. And then that would be taken on record. That would be streamlined. Then going forward, you can file an APR on a yearly basis.
Okay, thank you.
Thank you, Manik.
Okay, so we have the next one from Mr. Vishal Bindra. So Mr. Bindra, you can talk to them directly now.
Hi. So we are a company which is, we've created, we are in cybersecurity, and we have our 2 IPs which we have created here. And, before we start to raise capital or, bring investment, we wanted to move IP to US. How is it possible? And, what is the, what are the process, anything that we need to take care, and how can you help us?
Martin, this is for you.
Okay, let me understand that you have formed a company, but you haven't raised any capital. Is that correct?
Yeah. We've not raised. It's all bootstrapped from our own money in India.
Okay, well, in terms of coming into the United States, are you thinking of coming here and establishing a legal presence here as a startup company in the States? Or do you want to begin with minimal investment, minimal risk by working through a distributor, distributing similar products to the marketplace that you want to penetrate?
No, we want to register as a startup.
You want to come in as a startup. Well, you would be able to come in as a startup, provided that you would form the company, whether it be a C corporation, an S corporation, which is a branch of a C that can turn into a C, or a limited liability, a partnership, a sole proprietorship. And I didn't take the time to go into all of those different ways of establishing a presence in the States, or if you're here to establish that presence. Make a decision how you're going to come in, go through the processes of establishing the legal existence in the States, fill out your EIN. Your EIN number is very important, your employee identification number, because that is your identity with the federal government. That's like your name with the federal government. When they communicate with you, everything revolves around that particular registration. So you would come in, establish your company, get your EIN number, then you would be free to operate. Now we'd have to answer the visa questions, who could come, how long they could stay. And that would have to be addressed on an individual personal basis. But as a general rule of thumb, you come in, you determine what type of corporation or what type of presence you want to establish, go through the process of establishing that, registering your business, getting the EIN number, then you fund it here locally out of private funds. We don't have the requirements where you have to come in and put X number of dollars. You have certain annual fees that you have to pay. For example, in Wyoming, if you register in Wyoming and form your corporation in the state of Wyoming, that doesn't mean that you have to be located there. That's just your company's state of residence. You can operate any place you want in the States, but you have a $50 a year filing fee. Then you pay a tax based on your annual revenue. So that basically is the situation. Have I answered your question?
Okay. Partially, I think there's a lot that I'll need to understand from you. So I'll leave my email ID and, maybe we can connect later and then take it forward, because, we would like to understand that how do we really, I think we'll need to take a decision whether we make that as a subsidiary of Indian business, or we open a totally new startup there and other things. So I think I'll leave my email ID in the Q&A, and then probably we could connect later on this particular thing.
Very good. Look forward to speaking with you in more detail. Thank you so much. Appreciate it.
Yeah, thank you.
Thank you, Mr. Rudra. The next one is from Mr. Amit Singhal, and that is again for you, Dr. Palante. So he's asking what are the tax rates in Delaware, and now he can speak to you directly.
Amit, good evening to you and thank you for your question. I don't know the specific tax rates in Delaware as it relates to corporations and personal, but if you leave your address, your email address, I can get those to you before the end of my business day today. I am assuming that the personal tax rates and the corporate tax rates will be towards the lower end of the spectrum, not the higher end of the spectrum, but leave your address. I don't want to give you bad information. Just leave your email address and I will get that information back to you before the end of the business day today. Thank you.
That would be great, Martin. Thank you very much.
All right, so Mr. Shailesh Patel would like to speak to you. And Mr. Patel, you can ask your question now.
See, I have an Indian company and we are doing trading of costumes on Amazon USA. We buy from a US vendor and we sell costumes to retail customers in USA. So what I wanted to know is like, can I have a bank account open in any bank in USA without establishing or setting up a company in USA as an Indian entity?
Yes, as an Indian entity, yes, you can establish a bank account in the United States. Yes, sir.
So what do I need and what is the procedure? Will you be able to help me? Should I email you my details or?
Email me your particulars and I will get back to you with the steps for making that happen.
Okay, so I don't need to have any establishment or any company registered in the USA just to open a bank
Just
account.
as long as the account would be established in your personal name. This would be a personal account unless you want to establish an offshore account for your Indian company.
Yeah, I would prefer it for an Indian company.
Okay, then we would have to look into the banking regulations to see what would be possible in terms of a regional bank or whether it would have to be in with a partner of a base Indian bank or one of the top 25 international banks.
Okay, fine. Okay,
Yes,
I'll send you an email.
Send me your email address and let us check that out for you.
Sure, I'll type my email address, I'll send you, and then you can revert back to me on that.
Very good, sir.
Thank you, sir.
Okay, so we have Mr. Abhinav Prasad to talk to you next.
Hello.
Yeah.
Hi, Mr. Martin. Thanks for your ideas and it's very nice.
Thank you very much. Nice to speak with you. How can I help you?
Yeah, so in this, the corporate tax rate and the state taxes, you have mentioned that in California, it's a little bit high. So would like to know what is the difference between federal tax rate and state taxes?
Well, the federal tax rates are established by the federal government, by the people in Washington. They are typically proposed by the administration and then acted on, either approved, rejected, or compromised through the Congress, then the Senate, and then back to the Congress. So it's a process that takes place in Washington, D.C. at the federal level. Then the states, depending upon their needs, they establish in their local state government, they have the right by the 10th Amendment to the Constitution, they have the power and the right to establish state taxes. California, they have a lot of social programs, a lot of, unfortunately, a high degree of and a high amount of people that are homeless. Their social programs are very expensive there. Hence, they have the need for very high taxes. That's why California's personal tax rate is 17.6%. Also, you have the entertainment industry pretty much headquartered in California. You have two industries that are very wealthy, the entertainment industry and the wine beverage industry. Both of those industries support the higher taxation. What does that mean then to people not in those businesses? Right now, those businesses are fleeing California. They're going to Wyoming, to Montana, to South Dakota, North Dakota, Arizona, to Texas, where the tax rates and the business regulations are more friendly. That's one of the reasons why I wanted to post those taxes, so people could see that it really is very difficult to succeed as a normal business outside the entertainment business, outside the beverage business, or what they call big tech in Silicon Valley, which are the Microsofts, the Facebooks, the Twitter, businesses like that. But that's how those federal taxes are established in Washington. State taxes are established at where the state's capital happens to be located. In California, it's in Sacramento. Have I answered your question, sir?
Yes, yes. Thank you.
You're welcome.
One more question. So regarding this state tax, if we are an Indian IT company, so if we are planning to go for California registration, does the tax will affect us?
I'm sorry, repeat that again. You have a company you want to locate in California.
Yes. So on tax terms, that the taxes will affect us very huge, or you will suggest to go for southern states, as you said, the lower tax rates will be there?
Well, I think we have to investigate. Taxes are a major part of the question, but where is your market? Is your market a broad spread U.S. market? Are you targeting the U.S. market? Are you targeting more of a global market? You have to investigate where your market is, what the cost of doing business is in California overall, not just taxes versus, say, establishing in Texas or Arizona. Are the employees you need available in Arizona? Are they available in Wyoming? Or are they concentrated in California? So there are many legs on that stool. So we would have to look at that from an overall picture. Okay. And at the end of the day, when we add up the positives and the negatives, who wins? Does California win? Does Texas win? Does Ohio win? What kind of grants will the state of California provide to you for bringing your business to California? If you bring it to Ohio, for example, the state of Ohio, Jobs Ohio, will help support your company through tax abatements, whether it's property taxes, income taxes. They'll help you find employees. So this is a whole big picture question, and that's one of the things we help you do when you make the decision to come to the States. We just don't say, well, do it here or do it there. It's an equation with many components. And when you add X, Y, and Z, we want to make sure that they come up with the right answer for you. But if you go to California, you will be subject to the taxes as a business resident of California. You take on you become a person in California subject to those corporate taxes there.
Okay. Yeah, thanks for the clarification. Got it.
You're welcome.
Okay, so we have Mr. Muralidhar Ramarao to speak to you next.
I am here.
Yeah, hi, Martin. This is Murli here from Bangalore. Yeah. And I have an IT company here in Bangalore, and a little bit about my background, having more than 20 years of IT industry experience. And I was in the US for almost close to 9 years consulting. And due to personal reasons, I came back. My question to you is, if I want to register a company in the East Coast, and what is the process, and what are the tax benefit that I'm going to get? Can I operate from Bangalore?
Well, you would operate, again, are you going to be distributing product or manufacturing product in your US company?
Yeah, well, my main business is IT services, and we are in the process of building a products which can be sold across clients, be it the BFSI, manufacturing, oil and gas.
Okay, I'm not sure I understand. Go through that again. I had a little trouble hearing you.
Yeah, my it's IT services basically. Okay, I service the clients across the globe. So I want to enter into the US market, and we have product like CRM and HR and payroll. So if we want to set up the company in the East Coast, and what are the tax benefit that I'm going to get, and what is the process of setting up the company there in the US?
Well, first of all, we'd have to look when you talk about the East Coast. You're going from Maine to Florida. A lot of movement of business now is going to South Carolina and to Georgia. South Carolina has zero personal tax. They have a good employee base there. So, the steps would be really to look at the different states, see how they stack up against each other, then talk to the business development groups at each of the states. I personally would rule out Maine, New Hampshire, Vermont, any of the Northeast. Definitely, I would rule out New Jersey or New York, Boston, Massachusetts. Business just too expensive in those areas. Maryland, I would probably skip Maryland and start at North Carolina, Virginia, North Carolina, South Carolina, Georgia, Florida, maybe Alabama. And we would look at the state taxes, how they would impact you, talk to the state business development agencies and see what kind of incentives we could make available to you for how long. And at the end of the day, what was the best situation for you? It's a step-by-step process. Where do I want to be? Why do I want to be there? How am I going to get there? Then we could register your subsidiary company. We could register it any place. If we located in South Carolina, we could still register it in Wyoming. I happen to prefer Wyoming. My companies are registered in Wyoming. Have I answered your question, sir?
Yeah, a little bit. But what are the tax benefits? Since mine is a startup company, if I have to be a startup, are there any tax benefit over there in the East Coast?
Yeah, there are tax benefits. They differ from state to state, and and they change day to day. How eager is South Carolina today to bring in another IT services company? How many people are you going to employ? Are you going to employ 5 or are you going to employ 100? If you're going to employ 5, you get one benefit, maybe. If you're going to employ 100, you'd get some benefit. For example, LG, the Korean company, and General Motors have formed a joint venture in Ohio within about 15 miles of where I'm sitting to produce lithium batteries for the transportation industry. They're going to employ 1,100 people, 1,100 people when they open that factory. Now they have incentives from the state, from the county, from the city where they're located because of the size of the investment that they're making in terms of real estate, in terms of construction, in terms of employment. The same would apply to you. We have to shop your company, so to speak, to see where we could get the best deal for you. I can't give you a specific answer as I sit here, what kind of tax benefits I could get for you. If it's a 1 or 2 or 3 or 4 person company, I might not be able to get any tax benefits for you. That would not impact the overall economy to that degree. So I have to know lots more about what you want to do, how you want to do it. And then we could answer that question, where you're going to do it and what tax benefits you're going to get. Happy to work with you further. Just drop me your email address and we'll see what we can do to find out more specific information for you. I sure appreciate the opportunity to speak with you and would look forward to helping you go forward.
And my following question to you, Mr. Martin, is can I work with partners to start off with and then try to register my company there. Is it possible?
It is possible. It is possible, but there will be a suspicion on the part of your partners that you're looking to establish an initial presence with. There will be a suspicion on their part that that would be your intention. And so they would say to me, why should I work with this person that's going to become a competitor 3 years from now? So it would be, again, we'd have to find the right partner for you where going forward, you could coexist successfully. We had a similar situation the other way around where we had a large sporting good manufacturer in the United States that we introduced into India. And we had a very difficult time finding a distributor for him because all of the distributors that were interested in him, he knew that they had manufacturing capabilities and they would be copying his products within a year or two and he'd be left with no distributor. So there are many, many complexities involved here, but we could work through it and see what we could do. Obviously, tie that together with the taxation problem and opportunities and go forward from there. Thank you.
Okay, I will drop my email, Mr. Martin. If you share your email ID, I will write to you.
Okay, just drop that in the, I think if you put that in the question section there that Rika will be able to send that to me. Thank you so much, sir.
Thank you, sir.
All right, so we have Mr. Nikhil Agarwal to talk to you next.
Okay, very good. Good afternoon, sir. How are you today?
Thank you, Martin. Doing good. Hope all of you are safe and healthy. And thank you.
I am both. Thank you for asking.
Great, good to hear that. We are actually an investment company here in India. We have a separate investment arm which is in the public, which is investing in the public market, and we have a private equity investment through which we are. It's like a typical private equity, also looking at early stage investments with angel and VC investments. So we were looking to set up a similar entity in US, and none of us are actually US citizens, or we don't have. We tried the EB-5 route to get to kind of get our access to form a company there or get a visa, but 2 years earlier the cost was almost doubled from $500,000 to almost $1 million now. And so is there any other way that our group can actually form investment entity there and start investing in companies and also real estate in US?
I would have to look into that. I wish I could answer your question straightforwardly, but I do not. Unfortunately, I do not have a background working with people in the investment capital business, either in the real estate or the equity business. So my answer would not be one that, that we could count on. Again, drop me your email address and a brief question, and we will research that, check with the authorities in that particular end of our business, and get back with you in due time. Okay?
Sure, that'll be great. So I will leave my email ID in the Q&A part.
Very good. We only want to answer questions where we have the knowledge. I don't want to mislead anyone. So I would rather say, I don't know, but I'll check it out and get back to you. Thank you so much, sir.
Sure, much appreciate that. Thank you so much.
All right, so we have Varada A to talk to you next.
Hello. I'm not hearing anything, Rika.
I think Vicha, you have to unmute her.
Yeah, I've asked him to unmute. He's to do it from his end.
Okay.
Or maybe her. Okay, I'll read it out. It's approximately how much cost to incorporate the C Corporation company in USA.
Let's say we're going to do that in Wyoming. We're going to incorporate in Wyoming or Delaware. The basic incorporation, just the incorporation fees would be roughly $5,000. but then we get into checking the name registration, which would be another fee, and that depends on how many similar names we have to work through before we get to the final analysis. So I would say that we could really put together a budget or set aside a budget of $10,000 for the initial registration and then go from there. Hello?
Okay, I think she or he hasn't unmuted himself or herself.
Okay, well,
Yeah, so that's fine. Okay, we'll drop an email later maybe.
right.
And we have the next one from Mr. Mohan Ramaswamy. Okay, yeah, it's done. It's done. Okay, so I think that's the end to the questions here. If any more question, any other doubt, I'm sure we'll be able to connect with all of them through an email, or maybe your details, they can call you up.
Right, just send me the email, phone me. Typically, my hours in my office are 9 a.m. to 7 p.m. Eastern Daylight Time now, or you can get a hold of me through my email address. But I want to thank everyone. I want to thank Niraj and Rika for hosting the presentation today, and all the attendees. It was great to be with you. Thank you so much. Have a nice weekend, everybody. Bye-bye.
Thanks, Martin. Thanks,
Bye-bye.
everybody.
Thanks, Raj.
Thank you. Thank you.
Bye-bye. I will
Thanks,
drop
everybody.
you an email later today.
Sure. Thank you, Martin.
Bye-bye.
Thanks, everybody. Thank you.
Thank you all.
Thank you.